Good morning, ladies and gentlemen. Thank you for joining me today at our 2022 Annual General Meeting. For those of you that I haven't met yet, my name is Mike Wilkins and I'm the Chairman of QBE Insurance Group Limited, and on behalf of your board, it's my pleasure to welcome you to this hybrid AGM. I also welcome those joining us via the web and via teleconference. If you're watching the live webcast whilst also listening through the teleconference, you may notice a slight delay with the webcast. Before I begin, I'd like to acknowledge the traditional owners of the land on which I stand today, the Gadigal people of the Eora Nation, and recognise their continuing connection to land, waters and culture. I pay my respects to elders past, present and emerging, and any First Nations people joining us today. Every effort has been made to ensure that this meeting runs smoothly. Arrangements have been made for shareholders to ask questions online or over the phone, and we'll open the lines later in the morning. I've also endeavoured to address questions submitted prior to the meeting in my formal remarks. Shareholders here in person will also have a chance to ask questions when we reach that part of the meeting. If any technological issues do arise and it becomes necessary to provide any procedural information in respect of this meeting, updates will be provided on our website. A recording of the meeting will also be available on our website. There being a quorum present, I declare the meeting open. The notice of meeting, which was made available to shareholders on the 1st of April 2022, will be taken as read. The minutes of the 2021 Annual General Meeting, being in order, were signed and a copy is available for shareholders upon request via Computershare. Of course, joining me here today is our Group CEO, Andrew Horton. Our Deputy Chairman, John Green, and my fellow Director, Jan Skinner, are also here with me. I'd also like to introduce Yasmin Allen, who is sitting in the front row and will be seeking election to the board at today's meeting. Our other directors are joining via teleconference: Stephen Fitzgerald, Tan Lee, Kathy Lisson, Sir Brian Pomeroy, Eric Smith and Rolf Tolle. Our Group General Counsel and Company Secretary, Carolyn Scobie, is also here with me. Maria Jopelik of Computershare Investor Services will act as Returning Officer for the purposes of conducting and determining the results of the poll. Partners from our external auditors, PricewaterhouseCoopers, Vula Papagiorgio and Renee Cooper, are also here and are available to answer questions on the accounts or on the conduct of the audit. All resolutions at today's meeting will be decided by a poll which recognises the votes of those shareholders present today and those who voted by proxy, and it gives all shareholders an equal voice in determining the matters before the meeting. Each share in QBE carries one vote. There are a number of procedural matters which I must draw to your attention. As I mentioned earlier, voting today will be conducted by way of a poll on all items of business. Shareholders who are attending in person can vote on their devices in the room via the Computershare platform by scanning the QR code on your attendance card with your smart mobile device or on the iPads that have been provided. This will take you to an online voting page. To cast your vote, simply select one of the options. There's no need to hit a submit or enter button as the vote is automatically recorded. You'll receive a vote confirmation notification on your screen. You can change your vote up until the time I declare voting is closed. Non-voting shareholders will receive a card and will not have the ability to vote online. Shareholders attending online should refer to the instructional slide now on your screen for the voting instructions. If you're eligible to vote, once voting opens, please press the vote icon and all resolutions will be activated with voting options. To cast your vote, simply select one of the options. Once again, there's no need to hit a submit or enter button as the vote is automatically recorded. You can change your vote up until the time I declare voting closed. I now declare voting open on all items of business. Consistent with how we've conducted our meetings in recent years, for those that are eligible to vote, you may vote on all resolutions at any time during the meeting whilst the polls are open. We'll also take questions on all items of business at the same time. The items of business that we're considering at today's meeting are set out in the notice of meeting. For those of you attending in person, copies of the notice of meeting are available in the foyer. And for those of you attending online, the resolutions can be viewed in the platform. The voting icon will soon appear. Please submit your votes at any time whilst the voting is open. I'll give you a warning before I move to close the voting at the end of the meeting. The proxy results for each item will now appear on the screen. Proxy holders should note that all directed votes have been accumulated and recorded. Only proxy holders with open votes are asked to record a vote in favour or against a resolution or an abstention. As set out in the notice of meeting, as the chairman of the meeting, I will be voting all undirected proxies in favour of each item of business to the extent permitted by applicable law in each case, with the exception of items 6A and 6B, for which undirected proxies will be voted against. I now formally vote all undirected proxies in this manner and all directed proxies in accordance with the directions provided by shareholders. This is a shareholders' meeting, and therefore only shareholders, their attorneys, proxies and authorised corporate representatives are entitled to vote and ask questions. Questions relating to the personal or business affairs, including as a customer, are not appropriate for the AGM, but can be answered outside of the meeting. This year, we again asked shareholders to submit questions prior to the meeting. The key themes within the questions have been answered through my address, and we thank shareholders for taking the time to submit questions, as we certainly value your views. Shareholders who are participating online may submit a question at any time. They'll be answered at the appropriate time of the meeting, and I refer you to the instructional slide that is now on your screen. To ask a question, select the Q&A icon. Select the topic your question relates to from the drop-down list. Type your question in the text box and press the send button. If you're having any difficulties in asking a question, please refer to the user guide, which can be accessed through the platform. Shareholders who are attending in person will have an opportunity to ask questions when we've reached the relevant part of the meeting. I would ask shareholders to kindly use the microphones that are placed throughout the auditorium so that we can all hear you clearly. Please show your voting attendance card to the microphone attendant. Please introduce yourself to the meeting when it's your turn to speak by giving your name and any organisation which you represent. I'll nominate the microphone from which I'll take the next question. For those who'd like to ask a question by telephone, you may do so by calling the telephone numbers set out on page 1 of your notice of meeting and quoting QBE or entering the reference number code 100 205 51. To ask a question via the telephone, press the star key followed by the number 1 on your phone keypad, and you'll be connected to an operator once we've reached that part of the meeting. To cancel your request, press star 2 on your phone. Thankfully, that procedural stuff is now over, but having outlined all the procedural requirements of the meeting, we'd like to play a video which highlights QBE's new vision and purpose.
In 1886, 2 entrepreneurs started an insurance company in Townsville, Australia. Since then, QBE has grown and evolved to become an international success. We've changed a lot over the years, and the world has too. That's why it's time to reimagine a new future for QBE. One where we're the most consistent and innovative risk partner, driven by our purpose of enabling a more resilient future. A future where we help to create stronger businesses, communities, and minds. Where we help to mitigate the big risks and support the world's transition to a more sustainable future. We'll back the big ideas that can create lasting impact and help those around us build strength and embrace change to their advantage. The world has changed a lot since 1886, and it's going to keep on changing. That's why QBE is changing. And we're enabling a more resilient future for everyone.
Each year, this address provides me with an opportunity to look back at the key achievements and challenges of the past 12 months, while at the same time looking ahead to the future. Yet again, it seems that we're living through extraordinary times, and our ability to be resilient has never been more important. The pandemic continues to have far-reaching consequences for governments, businesses, and society more broadly, and while we've all learned to respond and adapt to the challenges, a level of ongoing uncertainty remains. Around the world, we continued to experience higher than normal catastrophe events throughout 2021, and that's continued in 2022. We've seen storms, extreme wildfires and bushfires, hurricanes and typhoons, and most recently along the east coast of Australia, devastating floods. The impact of these events can be overwhelming for families, businesses, and communities. Our teams have responded to these extreme weather events, expanding and scaling up teams to be there for our customers, paying claims efficiently and working with partners and suppliers to get people and businesses back to their lives as quickly as possible. As an insurer, this is fundamentally why we exist, to deliver for our customers when they need us most. We're also deeply saddened and concerned by the tragic events in Ukraine and the humanitarian crisis facing the Ukrainian people at home and abroad. Indeed, the global geopolitical landscape is one of the most challenging in recent history. Despite these challenging times, I'm extraordinarily proud of the way QBE has responded and the role that we play in society. While many of our people have faced their own personal challenges related to the pandemic and natural catastrophes, they've remained focused on delivering for our customers, they've adapted new ways of working, and they've supported each other. There's much talk at the moment around the relevant topics of increased community preparedness and resilience in the face of natural disasters, and the importance of greater government commitment to mitigation funding to prevent a number of these events from having the devastating effect on communities which they currently do. I'm pleased to see that there's now an industry-wide call on governments of all types to better inform communities of the risks that are present in their environments, to commit to multi-year mitigation funding to reduce, if not eliminate, the effects of future events, and to make our communities more resilient for the future. QBE supports these calls and believes that the time is right to have a proper national discussion on how we face into the future in a more confident and sustainable manner. Against this unsettled backdrop, QBE returned to profitability and growth in 2021, reflecting the strength of our business and the ongoing hard work of our teams. In February, we released our full-year results for 2021, demonstrating a good momentum across the business. QBE delivered a statutory profit of $750 million with impressive top-line growth of 21%, underpinned by rate increases, improved retention, and solid growth in each of our divisions. Our combined ratio of 93.7% was over 10% better than the prior year, and the improved underwriting result supported a group-adjusted cash return on equity of 10.3% for the year, the strongest result the business has generated in over a decade. The board was pleased with the improvement and momentum evident in the financial year 2021 and declared a final dividend of 19 Australian cents per share, up from nil for the 2020 final dividend. The board's reassessed the group's dividend policy and now expects to pay out 40 to 60% of adjusted cash profit annually, providing greater flexibility to balance our desire to grow, to reward shareholders and to maintain a strong capital position. In that context, the dividend payout ratio was around 40%. QBE's capital position strengthened during the year, notwithstanding the very significant organic growth in our premium base. Our PCA multiple improved by 3 points to 1.75 times and remains in the upper bound of our target range of 1.6 to 1.8 times. Our new Group CEO, Andrew Horton, will provide a first quarter performance update in his address, and I'm very pleased to welcome him to his first QBE annual general meeting. Andrew joined QBE on the 1st of September 2021, moving to Australia from the UK shortly after commencing. Since joining QBE, Andrew's demonstrated he's a leader focused on bringing the enterprise together, committed to continually investing in people, improving culture and driving a future-focused agenda. In January this year, Andrew and the Group Executive Committee shared a new vision, purpose and strategic priorities for QBE, providing a strong sense of direction for the future, which Andrew will outline in detail in his address. Andrew succeeded Richard Price, who provided important continuity and stable leadership as Interim Group Chief Executive Officer for the better part of 2021, and we extend our sincere thanks to Richard and wish him well in his retirement. Our rebuilding of the Group Executive Committee is now complete, with key new appointments and internal promotions throughout 2021, now bringing together a team with great industry knowledge and experience, broader commercial experience, and strong leadership in all its facets. We've continued to invest in our people and to foster talent, with a particular focus on succession planning and building future-ready leaders across our organisation. Diversity in its broadest sense continues to be a priority for QBE, and I'm pleased to report that our Group Executive Committee now comprises 45.5% women, and we continue to make progress on our target of having 40% women in leadership by 2025, with an increase over last year from 34.8% to 35.9%. In March of this year, we announced some changes to our board, and today we welcome Yasmin Allen as a non-executive director, effective from the 1st of July 2022. Non-executive directors John Green and Stephen Fitzgerald have made the decision to retire from the QBE board, effective at the conclusion of this annual general meeting. The board's grateful to John and Stephen for their many years of service and commitment to QBE. Their support and advice has been invaluable to both the board and senior management, and their stewardship as chairs and members of their respective committees have been critically important. On behalf of our shareholders and all of the people of QBE, I thank John and Stephen for the valuable contribution and wish them every success in the future. These changes are part of our ongoing board renewal process, and Yasmin's appointment also supports our commitment to diversity, with our board now comprising 44% women. The board remains committed to continually investing in our culture. In early 2021, we began a board-sponsored Culture Accelerator program and have pleasingly made significant progress during this time. We've got a clear view of our target state culture and a blueprint for change which will guide us over coming years. Our people are at the heart of our culture, and they've shaped the pathway forward with the support of the Group Executive Committee and the board, including board sponsors Tan Lee and John Green. Some of the key initiatives that we're implementing include a refreshed QBE DNA and shared language, a new recognition program, a new approach to how we listen to our people, and critically, culture is a key strategic priority for our business, reflecting its importance and our commitment to focus on this over the long term. Aligned with this, we've identified our target state risk culture and the behaviours that we expect to see demonstrated by our people, with a dashboard to monitor progress. Central to our cultural efforts has been an ongoing focus on inclusion and diversity. We conducted a global maturity assessment and we refreshed our inclusion of diversity policy, which we released in January 2022. The new policy emphasises the importance of inclusion as an enabler to unlocking the value of diversity and creating an environment where our people feel safe to speak up and share their ideas. As a global employer, we want to celebrate diversity in all its ways and the enormous benefits it brings to our people and our culture. Earlier this year, QBE was included in the Bloomberg Gender Equality Index for the 5th consecutive year and recognised for leading the way to progress workplace gender equality. While we recognise that there's more to do, we're proud of the progress that we've made and the positive outcomes that it has for our people. Once again this year, we're asked to consider a resolution that was requisitioned by a small number of shareholders. This refers to Resolution 6 of the Notice of Meeting, and the substantive part of this resolution, Part 6B, can only be formally considered if shareholders vote in favour of Resolution 6A, which seeks to amend the QBE Constitution. I'd like to summarise the Board's position in relation to this resolution. QBE is very clear regarding our position. We acknowledge climate change as a material risk to our business, and we take it seriously. Climate change is a significant global challenge that requires the collaborative efforts of many stakeholders to deliver an orderly transition to a net zero emissions economy. We're proud of our commitment towards addressing climate change. We're committed to transitioning to net zero emissions across our operations, investment and underwriting portfolios. For our operations, we've set science-based emissions reduction target, which is in line with the 1.5 degrees Celsius trajectory. We've also maintained our carbon neutrality for our operations. In 2021, we set intermediate targets for our investment portfolio in line with our commitment to the UN-convened Net Zero Asset Owner Alliance. In January of this year, we were proud to join the UN-convened Net Zero Insurance Alliance. For our underwriting portfolio, and subject to the satisfaction of any regulatory requirements, we'll work in line with our commitment to the NZIA. Working with the Net Zero Insurance Alliance members, who comprise some of the largest insurers globally, and in conjunction with the Partnership for Carbon Accounting Financials, we'll determine the methodology needed to assess carbon intensity of underwriting portfolios as a first step. Following setting the methodology, we'll independently set intermediate targets within 6 months of the publication of the Net Zero Insurance Alliance Target Setting Protocol, and these targets will be made public. This is a significant piece of work that will be carried out over the next 12 to 18 months. Our pathway to net zero emissions will be based on the latest available scientific knowledge, including the findings of the Intergovernmental Panel on Climate Change. This year, our enhanced environmental and social risk framework came into effect. Through our positions in the framework, we've committed to reduce our exposure to higher transition risks in the energy sector, including no new thermal coal and oil sands projects, and only supporting oil sands and Arctic drilling where the company is on a pathway consistent with achieving the Paris Agreement objectives. QBE currently has no direct investments in coal, oil or gas companies. QBE does have a diverse and international portfolio of customers in the energy sector, and we're committed to working with our customers to support a shift to more sustainable business models. This year, QBE launched a Sustainable Energies Unit to support customers as they transition to lower carbon energy. The unit will align our underwriting capabilities with the growing range of companies and energy systems that form part of the rapidly changing energy mix throughout the world, including solar, wind, hydrogen, and carbon capture and storage. We believe that only adopting an exclusionary approach to all fossil fuel-related activity on a categorical basis does not represent an orderly or practical transition pathway. We're moving towards a net zero emissions economy, but we also have to balance the need for energy that is reliable, safely produced, and affordable, as well as clean. As we're seeing play out globally, energy stability is a significant geopolitical challenge. The board believes that it's essential that we work through the development of our net zero emissions pathway in a methodical and orderly way, in line with global industry initiatives and their scope and timeframes. QBE has a proven track record in delivering on its commitments in this important area. In light of the significant progress that we've made in recent years and our existing commitments with both the Net Zero Asset Owner Alliance and the Net Zero Insurance Alliance, the board recommends shareholders vote against this resolution. In conclusion today, I'm enormously proud of QBE. It's a privilege to serve as chairman of this organisation. I'd like to thank our 11,000 people around the world for their dedication in supporting our customers every day. In particular, I'd like to thank Andrew and the Group Executive Committee for their leadership and for their ongoing commitment to QBE. I also extend my gratitude to my fellow directors for their support, commitment and stewardship of QBE. And finally, thank you to you, our shareholders, for your support of QBE. And I'll now ask our CEO, Andrew Horton, to address this meeting.
Thank you, Mike, and good morning to everyone here today. I would also like to acknowledge the traditional owners of the lands from where we're joining today and pay my respects to elders past, present and emerging. I was honoured to join QBE last September, and I'm pleased to be here today at my first QBE AGM. Since joining QBE, I've had the opportunity to meet colleagues, customers and partners, both in person and virtually, in many of our global locations. This has provided me with many great insights and perspectives of the QBE business and helped me develop a deeper understanding of QBE. I've been impressed with the strong foundations of the organisation. We have a great footprint and portfolio, which is diversified in terms of breadth of product. Our brand resonates well in our target markets, and we have strong relationships with our customers and partners. It's my intention to focus on building on the strengths of QBE as we look to execute on our new strategic direction, which I will talk to in more detail shortly. QBE's people are at the heart of our organisation, and they are talented, experienced, and committed to our customers, our business, and importantly, our communities. I've been particularly proud of the way our people responded to communities impacted by the devastating floods we've had here in Australia and the heartbreaking situation in Ukraine. Through our partnerships with Red Cross and Save the Children, we've been able to lean in and play our part in supporting people in need through our QBE Foundation grants, matching our employee donations and employees volunteering for our partners. Like many in this room, I've been in awe of the people and communities who've come together and supported each other, demonstrating extraordinary resilience in the face of great challenge and significant loss. The power of resilience cannot be underestimated, which is why it's at the core of our new purpose. Moving now to recent performance. Today, we released a brief performance update to the market. Despite a number of natural catastrophes and significant geopolitical events, positive momentum experienced throughout 2021 has continued into the first quarter of 2022. I've been pleased with QBE's resilience in this turbulent operating environment. Growth in gross written premium remained strong in the first quarter of 2022, up 19% on the prior corresponding period, or 22% in constant currency. Group-wide renewal rate increases averaged 7.9% in the first quarter, while growth ex these rate increases of 18% was substantial, albeit supported by growth in segments such as crop and QBE Re, where gross written premium is heavily weighted to the first quarter. We've had a strong start to the year for gross written premium growth, and we'll review the full year 2022 outlook at the half-year result following the key mid-year renewal period. Elevated catastrophe experience continued, including widespread flooding and storms across the east coast of Australia and Storm Eunice in the UK and Europe. Natural catastrophe claims for the quarter were, however, in line with the first quarter allowance. I want to comment on the events unfolding in Ukraine, where the tragic loss of life is deeply concerning. QBE currently expects to have some exposure to the broader conflict through a number of lines, such as political violence, political risk, and aviation. While the situation remains dynamic, potential net impact is currently estimated around $75 million, and the ultimate impact from the conflict were reported in catastrophe costs. While global investment markets remain volatile, interest rates increased materially over the quarter, resulting in the first quarter exit fixed income running yield improving to 1.52% from 0.68% as at the end of 2021. We've made good progress in repositioning our investment portfolio, with risk assets now representing 9% of total investment assets at the quarter end. As discussed at the recent 2021 result, our strategy centered around resilience and consistency should result in the business being capable of delivering a consistent low to mid-90s combined ratio. And based on our current view, for the full year 2022, we continue to expect a group combined operating ratio that demonstrates an improvement on the full year 21 exit combined operating ratio of around 94%. I'd like now to turn to the new strategic direction set for QBE. As I mentioned, QBE is a business with strong foundations and great potential, and I want to build on this. My overarching goal is to establish QBE as a consistently high-performing enterprise that is united both culturally and operationally with a clear strategic direction. The group executive and I spent considerable time defining our strategic priorities for the medium to long term, as well as ensuring our purpose and vision reflects our ambitions and unites us to make a positive and meaningful contribution to our customers, people, and communities. As you saw in the video, we've launched a new purpose and vision and the 6 strategic priorities which will guide us for the medium to long term. This has been an important milestone for QBE and has resonated well with our people across the organisation, who've embraced our new direction. We acknowledge it will take time to deliver on these ambitions, but the journey has well and truly begun. QBE's purpose is enabling a more resilient future, and our vision is to be the most consistent and innovative risk partner. Our 6 strategic priorities are portfolio optimization, sustainable growth, bringing the enterprise together, modernising our business, our people, and our culture. Portfolio optimization is about more actively managing the future direction of our business by making deliberate choices about the mix of products we offer, the business lines and geographies in which we operate, and the customers we support. We're focused on developing new frameworks to optimize capital allocation and returns across our portfolio, whilst also better managing and ultimately reducing volatility in returns. Beyond changing our portfolio mix, we need to achieve sustainable growth in each of our regions, customer subsets, industries, and channels. We've created an opportunity assessment framework for consistent use across the enterprise. This assessment tool encompasses an appropriately weighted mix of strategic, financial, and operational considerations. I'm encouraged by the opportunities across the group to deliver growth in areas that are supported by clear and robust underwriting strategies aligned to our overall vision and purpose. We're actively looking at ways to enhance and improve our operating model as we look to better bring the enterprise together and harness the power of the QBE Group. A set of fundamental operating principles have been developed to serve as a guide for enabling QBE to better leverage expertise and capabilities across markets and align activity with overall strategic value. A key goal is to simplify what we do by driving consistent processes and having clear governance. To embed these principles, some of our newly reset leadership cohorts will lead opportunities for implementation and change. We're modernising our business to ensure we are a future fit and a modern insurer. We'll complete the modernisation of our foundational IT systems and processes and accelerate development and investment in our digital capabilities to make things easier for our customers, partners, and people. This workstream has been collaborating with our portfolio optimization and sustainable growth teams to ensure we invest in the right capabilities to achieve our target business model. At the same time, we have programs in place to build and encourage a future-thinking mindset. As a key measure of success for our people, we're focused on becoming an employer of choice in our chosen markets and building a sustainable and diverse pipeline of leaders. We're launching an enterprise recognition program to reward and recognize our people in a way that drives positive culture and enterprise performance. Separately, we've finalized our reset of enterprise leadership groups and rolled out our new incentive scheme, both of which will support the implementation of our 6 strategic priorities. Finally, and very importantly, our culture. We're focused on becoming a more purpose-led organization. We want our purpose to be visible every day in every interaction we have. We've defined our target culture and used that to create a culture dashboard. We've been tracking the progress to date, and we're using the trends coming out of the dashboard to develop new initiatives and training programs. Underpinning these priorities is a continuing focus on embedding sustainability into our business. Mike, in his remarks, addressed the actions and commitments we've made in relation to the very important issue of climate. I'd like to build on this and speak more broadly about sustainability, acknowledging the importance of all ESG considerations for our organization. Our aim is that sustainability will be integrated throughout our strategic priorities and business to become fundamental in all that we do. I've been impressed with the number of initiatives underway at QBE and proud we've committed to a net zero emissions target by 2050 for both our underwriting activities and our investment portfolio, having recently become a member of the UN-convened Net Zero Insurance Alliance. We've also committed to net zero across our operations. However, I recognize if we want to be a leader in this space, which is my hope and intention, we need to do more. Building on our sustainability credentials, we've refreshed our approach to establish a consistent and well-understood sustainability strategy across the whole business, which extends to our employees, customers, partners, investments, communities, foundation partners, and our broader operations and procurement. As we continue to enhance our capabilities, I'll be personally focused on embedding our sustainability framework across our underwriting activities, and I want to drive greater momentum on this front over the coming year. We want to ensure we have a consistent approach across all industries and regions, which will include a role in supporting customers on their pathway to a net zero economy. In closing, I'm honored to lead QBE. The organization delivered a strong result in 2021, and this performance has continued into 2022, demonstrating momentum across our organization. Along with the leadership team and our people around the world, I'm excited to build on QBE's strong foundations with a clear vision and inspiring purpose. Notwithstanding this, I acknowledge the operating environment will be challenging, particularly in respect to claims inflation and the geopolitical environment. I'm confident we have a strong business, the right strategic priorities, and the right team to deliver for our customers and shareholders. I extend my sincere thanks to my GEC colleagues and everyone at QBE for their warm welcome to me, their great support, and for their efforts and passion for our company over the last 12 months. Thank you to you, our shareholders, for your ongoing support of QBE. I will now hand back to Mike.
Thank you, Andrew. Before we open the meeting to questions, I'd like to present a video of your director, Rolf Tolle, speaking to his re-election as outlined in Resolution 5A of the Notice of Meeting. This has been pre-recorded due to the time zone differences to Rolf's location.
Good morning, ladies and gentlemen, dear shareholders. I am pleased to submit myself for re-election to the board of QBE. I am based in Norway and joined your board in March 2016. I currently serve as chair of the Risk and Capital Committee and as a member of the Audit, People and Remuneration, and Governance and Nomination Committee. I've had a career in insurance spanning approximately 40 years. I served as the Chief Executive Officer of Europa Re, Managing Director of the Norwegian insurer Polaris Unipolaris, held a range of senior positions with Scandinavian insurer Storebrand, and I've worked in the US with Christian General. I served as the Chief Underwriting Officer of Faraday Lloyd's, part of Jane Re, Berkshire Hathaway Group, and served also as the board member. I joined Lloyd's in March 2003 and was Lloyd's first franchise performance director, and in the role for approximately 7 years. As franchise performance director, I served as a non-executive director of the Exchanging Claims Service Board and was a member of the Franchise Board of Lloyd's. I also served as a board member of the Faraday. I was previously vice chairman of Protector Forsikring ASA and a director of Beasley plc and Beasley Forlong Limited, where I was a member of their respective audit committees and risk committees, including a period as chairman of the latter. I held a diploma in political science from the Free University of Berlin. I'm currently a director of Marco Insurance PCC Limited and British Reserve Insurance Company Limited. I'm also on the advisory board of Risk Limited, an insurance tech company in the UK. I will be very honoured to continue to serve on your board and look forward to working with our chair, Mike Wilkins, our CEO, Andrew Horton, and the wider management team to assist QBE to achieve its vision and reach its potential. I would greatly appreciate your support for me to continue to serve on your board. Thank you very much.
As Yasmin Allen is here with me today, I'll ask Yasmin to speak to her election in person. So Yasmin, if I can invite you to speak.
Thank you, Mr. Chairman, and good morning, ladies and gentlemen. Thank you for giving me the opportunity to address your meeting today. I'm very pleased to submit myself for election to the board of QBE, and subject to shareholder approval, I'll join your board on the 1st of July 2022. I'm based in Sydney. My background and experience is set out in the notice of meeting before you, highlighting the contribution that I will bring to your board and company. I have more than 20 years' experience as a company director and chairman, serving companies across a wide range of industry sectors and including public, private and government boards. I have a long track record in highly regulated sectors such as natural resources and financial services, and in industries facing disruption from technology and market changes. I was previously a senior investment banking executive, specialising in equity markets both here and in the UK. I'm currently a non-executive director at Cochlear Limited, Santos Limited and the ASX. I'm also chair of the Digital Skills Organisation, a federal government initiative to drive innovation in training and to align graduate outcomes with industry needs. And our ultimate aim there is to create employment across Australia's growth sectors, something I'm very passionate about. I'm a member of the Federal Government Takeovers Panel and have been its acting president since 2019. I'm also a member of Chief Executive Women. I was formerly a non-executive director at Insurance Australia Group, and that was between 2004 and 2015. This broad range of experience drives my awareness of both the challenges and the opportunities facing your company. I also believe that business performance is increasingly being driven by the evolution of technology. I keep myself up to date and have contemporary technology experience through my roles as previously mentioned, the chair of the Federal Government DSO, and I'm also chairman of TikTok Online, a digital home loan platform company. My commercial experience, both here and overseas, gives me insight and a global perspective as market structures and regulation continue to evolve. I'm focused on shareholder returns, and I will ensure that QBE remains at the forefront in transparency and accountability. I'm used to working in highly complex and regulated environments. I have the time to fulfil my duties as a non-executive director of QBE, and I would be honoured to have the opportunity to serve on your board. If elected today, I look forward to working with Chair Mike Wilkins and CEO Andrew Horton and his executive team to assist QBE to maximise its potential and to serve the interests of customers, shareholders, our people and the community. Thank you very much.
Thank you to both Rolf and Yasmin. I'm now opening up the meeting to questions from all shareholders. All questions should be addressed to me as the chairman and should start with the item of business to which it relates. I ask that you keep your questions short and to the point so that as many shareholders as possible have the chance to participate in today's meeting. Please also note that as our time is limited, it's possible that not all questions will be able to be answered today, and if we receive multiple questions on the one topic, they may be amalgamated together. I also ask that you choose one platform to ask your question rather than submitting the same question through multiple platforms. I refer you again to the instructional slides on how to ask questions on your screen and behind me. I now open questions here in the room in Sydney first and invite shareholders to go to one of the microphones that are set around the room. We have a question at microphone 2.
Thank you, Mr. Chairman. My question is in 2 parts, if you'd bear with me. Every plausible science-based scenario for keeping warming well below 1.5 degrees, as well as the International Energy Agency's net zero by 2050 scenario, requires no new oil or gas production projects to go ahead from right now. Yet, QBE's policy allows it to ensure new oil or gas production projects, and the company's building and planning these new oil and gas projects, does it not? If you could maybe just confirm that for me, if I understood correctly.
QBE will look at a new project for existing customers.
Okay, so I think the question is, there's a clear conflict here between your policy of continuing to be open to ensuring oil and gas beyond 2030 and then beyond 2040 as well. There's a clear conflict there between that and your aspirations to support the Paris net zero. So wouldn't you acknowledge that QBE only supports Paris and net zero in words and not in its actions?
No, I disagree very significantly with your last statement. QBE certainly supports Paris. I mentioned during my address, Andrew touched on it, it's included in our sustainability report. We support the Paris Accord and are moving towards a net zero approach in our own operations through our investments, but also in our underwriting portfolios by 2050. The fact that we have signed up to the Net Zero Insurance Alliance, and QBE is the only Australian insurer, or Australian-based insurer, to sign up to that alliance, says that we are definitely on a pathway to net zero in all of our underwriting portfolios by 2050. So I do not agree with your assessment that we are paying lip service only. We believe that we've made significant efforts and will continue to make those efforts towards a net zero future.
So the UN, the IPCC, says that we must be cutting emissions drastically in this decade in order to achieve the goals of the Paris Agreement, and that includes no new coal, oil and gas projects. But your policy is to allow those projects, so I don't see how that can be consistent.
We do not believe that a purely exclusionary approach is a responsible way to get to that net zero. As I mentioned during my address, we believe that the world needs continued reliable energy now. What QBE is committed to doing is to working with its customers towards that net zero outcome over the next several years. I mentioned that as part of the Net Zero Insurance Alliance, we will be setting scientific-based targets to achieve that, and we will report against those targets within the next 12 to 18 months.
Okay, so the IPCC has set the science-based targets for you, really. That's already been done. I know you've talked about an orderly transition, but really in the context of an insurance market where many of your peers are already ruling out this type of business, talk of an orderly transition really sounds like double-speak for further delay.
Well, I think I disagree with your assessment. I believe that we are on a responsible path, working with our customers towards that net zero future. I think that there's not much more that I can say to that.
Okay, thank you, Mr. Chairman.
Thank you. Microphone 1.
Ian Graves, Mr. Chairman. I wanted to ask a question on the remuneration report. Is this the right time?
Welcome, Mr. Graves, and yes, this is certainly the right time.
Okay, thank you. As you know, we have in the past recommended our members that we vote against the report, and we're going to do so again this year. Our main reason for this is that we disagree with your approach for the short-term incentive and the framework around it. This is because at the moment, if someone gets the full STI at the maximum opportunity, it will comprise 43% of their total remuneration, and this is far greater than their long-term incentive. We believe that that approach encourages people to short-term incentive, short-term thinking and behaviour, and is against the interests of the shareholders. Thank you, Chairman.
Well, thank you for your question, Mr. Graves, and thank you to the Australian Shareholders Association for your early engagement with us towards this. I understand what you're talking about. You refer to theoretical maximums, and with respect to the executive team that's in the audience, if they achieve maximum outcome for their short-term incentives, I think that basically the shareholders will be delighted, given what the economic performance of the organisation has been. We work on a target which is significantly less than 100%, and I think the way in which we weight those targets or the overall remuneration between fixed remuneration, short-term incentives and long-term incentives is the appropriate mix to incentivise our executive team to think for the long term and to also take, because we do require the long-term incentive is all equity-based, and a portion of the short-term incentive is both deferred and equity-based, so we require them to adopt a similar mindset to shareholders.
Thank you, Chairman. It hasn't changed our opinion, but thank you.
Thank you. Question at microphone 2.
Hello, my name is Naomi Shine and I'm from Lismore. Years ago I was involved in the successful community campaign to keep the Northern Rivers region gas field free. That campaign is one of the contributions of the people of Lismore and the Northern Rivers have made towards a safe climate future. On the 28th of February, I lost my house and my belongings in the record-breaking flood. It was like nothing we'd ever seen before. It was a terrifying experience. Citizens performed 4,000 plus rescues, helping residents out of the waters, and an elderly person in my street drowned in her home. This record-breaking flood was fuelled by burning fossil fuels. The oil and gas companies QBE continue to support contributed to the flooding of my home. And the scary thing is, with more carbon emissions going into our atmosphere, we are likely to see much worse in the near future. As an insurance company, you're aware of what's happening and how bad the climate crisis is getting. We defeated MacGasco in the Northern Rivers, but many other communities are still fighting their battles against the polluters. So with the knowledge QBE has regarding the urgent need to reduce emissions via the rapid reduction in the production and use of fossil fuels, I would like a yes or no answer as to whether it is prepared to underwrite the following projects: fracking and any gas production in the Beetaloo Basin in the Northern Territory,
I do not have any particular knowledge about individual projects, so it's going to be difficult for me to comment on specific areas. I can address your question in broader detail, but I don't think it's appropriate, nor am I informed to be able to comment on specific projects.
Okay. Well, that sounds like vague and like fracking in the Northern Territory, Narrabri gas project in the Pilliga Forest, Woodside Scour project, East African oil pipeline. They're all potentially going to be underwritten by companies like you. So that's upsetting.
Well, thank you for your question. And firstly, can I just offer my sincere sympathy and support for what you've experienced and what your community has experienced. It's a terrible thing when catastrophes of any type hit, and I certainly empathise with you, and I hope that you and your family are safe and well and on the road to recovery. In terms of your broader question, rather than dealing with specifics, I've outlined QBE's position. We believe that an orderly transition to a net zero approach is the most appropriate method for us to take. We do not support an immediate cessation of oil and gas because we think that's counterproductive. What I can also say, though, and it's interesting, I mentioned in my address that we'd recently launched a sustainable energies unit. And that certainly is something that we're very proud to have done. And for the information of the meeting, just so you can try to get some concept of the size of this, we currently insure more sustainable energy customers than we actually insure oil and gas customers. So I think that that's also important to be recognised. We have another question on microphone 1.
Sorry, Mr. Chairman, I'm back again. I didn't fully understand the instructions. But I do have 2 other questions. None of these two, one's a voting item. We have, as you know, repeatedly asked the board to include the board's skills matrix, which is recommended by the ASX Corporate Governance Council. Will the board be giving consideration to doing it for next year?
Well, Mr. Groves, we set out in our corporate governance statement the various skills that form part of the matrix that we do have, and that's in our annual report. As always, and as I indicated to you when we discussed this, we will take your concerns on board and look at whether there is a better disclosure approach that is available to us.
Thank you, Mr. Chairman. I hope this does occur, because the existing material doesn't give a shareholder much of an idea of the skill level of that's available on the board, and whether all have those. And when we're voting on an individual director, we've got to see how that fits in with the whole concept of the board.
Oh, well, just answering that, I think we do set out in the individual director profiles the experience and the skills that those directors have. So hopefully all shareholders feel that they have sufficient information to be able to assess that skill set and to take that into account when determining whether to vote for a particular director.
Thank you, Mr. Chairman. But that brings me on to a slightly different subject. As you're aware, we are talking about directors at the moment. With the new director, Yasmin Allen, she spoke to us this morning and is a very impressive candidate. However, when you look at her workload, although she gives a statement that she's well able to cope with it, we would just like to know how much time and how much work is involved in the bodies that she's with the government and also with the digital company.
Well, Yasmin and I talked about her workload before we invited her to join the board, and she informs me that she is well able to cope with the addition of QBE. I do know that she has reorganised some of her other private commitments to make sure that she has adequate time for this, and I'm looking forward to the contribution that Yasmin will make when she does join the board.
Thank you, Mr. Chairman.
Thank you. We have a question at microphone 2.
Thank you, Chair. Stuart Palmer from Australian Ethical Investment. We're one of the filers of the climate shareholder resolution. We currently hold about 2 million shares in QBE. Chair, in your address and response to one of the previous questions, you seem to be painting a picture of a choice between no energy at all from oil and gas on the one hand, and completely unrestricted new oil and gas projects on the other. And that's not the choice that we face. The question is not whether we will continue to use existing oil and gas supply for years to come. That is inevitable. The question is whether we compound our climate inaction with unrestricted new oil and gas exploration and production. The question is whether QBE waits until 2030, as its public policy currently states, to start restricting its insurance of expansion of the oil and gas sector. You've said that QBE has joined the Net Zero Insurance Alliance, and we agree these sorts of alliances are very important to promote the collective action we need to reduce emissions. All insurers, investors, companies need to do their fair share, otherwise it's every insurer, every company for itself, as extremes of weather and insurance losses become more and more extreme. But while joining the Net Zero Insurance Alliance is positive, it's very concerning that QBE seems to be using this as an excuse to once again delay action. Other members of the Net Zero Insurance Alliance aren't waiting. AXA last year announced it will stop underwriting new upstream oil greenfield exploration projects unless they are carried out by companies with the most far-reaching and credible transition plans. That's AXA's words, their public commitment. Zurich Insurance committed last year to no longer underwrite new greenfield oil exploration projects unless meaningful transition plans are in place. And Allianz has announced that from the end of this year, they will stop insuring any new oil and gas field projects. These are some of the biggest global insurers of oil and gas and also members of the Net Zero Insurance Alliance. You're the only Australian company which has joined that alliance, but locally, Suncorp has said last year it won't insure new oil and gas exploration or production, and it will phase out all existing insurance of oil and gas by 2025. So my question is essentially the same question we've been asking you and your predecessor for the last 4 years. What is holding QBE back from taking similar action to set and disclose criteria and targets for insurance of the oil and gas sector? What is holding QBE back from doing its fair share to deliver on its stated purpose of a more resilient future and to safeguard the sustainability of its own business?
Well, Mr. Palmer, thank you for your question. And thank you for also acknowledging that QBE's new purpose is an appropriate purpose with that. I don't believe that QBE is being held back, and I don't believe, and I've said this to you in answer to your question, I think, last year, that you make an incorrect assumption assuming that we are doing nothing until 2030. What we have said is that that is a cut-off date that we will look very seriously at. However, that's probably going to be revised as a result of our membership of the Net Zero Insurance Alliance. Currently, that alliance, which includes those companies that you mentioned, is looking at the global calculation methodologies across all portfolios, not just oil and gas, to determine what metrics are appropriate. And I've already committed today that within 6 months of those protocols being achieved, QBE will publish our timelines and our metrics around that. So sometime around the middle of next year, at the latest, you should expect to see that QBE's plan will be there, including a timeline and including metrics to be measured against.
Well, we certainly do look forward to that. I mean, your peers aren't delaying. Just to reiterate, we see QBE's single biggest climate impact is continued underwriting of new oil and gas projects in an unrestricted fashion and kicking that issue down the road. Once again, is inconsistent with QBE's stated purpose and its objectives for a sustainable business in our view.
Well, with respect, we're going to, again, this year, disagree, and I hope that by this time next year, we're able to convince you that QBE is on an appropriate and responsible path, which we certainly believe that we are.
Thanks, Jim.
Doesn't look like there are any further questions here in the room. We might now move to those questions that have come through online. So if I could ask that we go to those now, please.
Thank you, Chairman. We have our first question from shareholder Natasha Lee. I'm interested to know the reasons driving the increase in premium revenue in the agricultural sector. Is this due to increased risks in this sector or new products offered?
Well, thank you for your question. The majority of the premium revenue that QBE has in the agricultural sector comes from our crop business, which is based in the United States. And that business provides insurance for farmers' revenue, which would otherwise be impacted by planting conditions, harvest conditions, and weather events and similar things. The pricing is actually determined by commodity pricing, particularly corn and soybeans. As people would be aware, the cost of those has gone up significantly over the last couple of years. Our premiums go up in line with that. We have seen an uplift, which in part has been driven by pricing, but also we have grown some parts of that portfolio and expanded into some states that we didn't previously have representation in. And what that's done is it's actually broadened and diversified our risk. So I don't believe that we've actually taken additional risk. What we've done is we've broadened that risk, mitigated it, but the major effect is driven by commodity prices. Can we have the next question, please?
Thank you, Chairman. We have a question from Mr. Stephen Mayne. Did any of the main proxy advisors, AXI, Ownership Matters, Glass Lewis, ISS and ASA, recommend a vote against any of today's resolutions? Which of the proxy advisors are covering us, and are we aware of what they said? Does the Chair have a view about the proposed changes to Australian proxy advisor regulations, which would force proxy advisors to fact-check their reports by supplying companies with a copy as it is simultaneously sent to paying clients, and then giving the companies a right of reply via the ASX announcements platform? The proposal was blocked by the Senate, but Treasurer Josh Frydenberg is expected to try again if the government is re-elected and he holds his seat. Should he do this, Mr. Wilkins?
Well, Mr. Mayne, thank you for your question. All of the main proxy advisors cover QBE. Individual proxy advisors will make their own decisions, and those who subscribe to their reports will receive those recommendations. That's certainly not for QBE to share. We meet and we have detailed discussions with all of the proxy advisors, and we believe that they are constructive discussions, including and similar to the discussions that we have with the Australian Shareholders Association. In terms of your broader question around proposed legislation, I'll leave that to the government to determine.
Thank you, Chairman. We have a further question from Mr. Stephen Mayne. Well done again for not claiming any JobKeeper in contrast to some of our competitors. Did we have a board or senior management discussion about claiming it? What has been the reaction to our ethical position from staff, governments, clients, shareholders and the community, particularly as more details emerged about the biggest waste of government money in Australian history, where $38 billion were paid to claimants which didn't qualify under the rules of the $90 billion scheme?
Well, thank you again, Mr. Mayne. Basically, QBE did not take any JobKeeper payments. We did not seek to take any JobKeeper payments because we felt that it was not the responsible position for our organisation to do. I can also say that we made the conscious decision that we did not lay off any staff, we did not reduce any staff salaries during the restrictions that were placed by the pandemic. What our staff did demonstrate was significant flexibility as we transitioned to work from home, and we are now starting to ask our staff to come back to office, but we are also seeing that working flexibly is becoming the new norm, and I'm pleased to say that our people have adapted to that. Our staff engagement has been good, but at no stage was there a contemplation of taking JobKeeper or, as I mentioned, in any way affecting our staff during the pandemic.
Thank you, Chairman. We have one further question from Mr. Stephen Mayne. Blind Freddie could see that equities were incredibly cheap after the GFC. Why on earth did the board maintain its ridiculously conservative position of focusing the vast majority of our investments on short-date fixed interest securities for the past 15 years, missing every boom and grossly underperforming every investment benchmark? This foolishly risk-averse position has cost us billions. Why are we still shunning equities whilst putting our toe in the water with small allocations to property and infrastructure investments?
Well, Ms Mayne, I disagree with your comments on that. QBE takes a responsible position in terms of where we do invest our money, and that's driven as much by the regulatory requirements that we have. If you are referring to the pre-regulatory requirements, pre-APRA, when some people used to refer to insurance companies as investment vehicles that indulge themselves in expensive underwriting habits, I don't believe that that's the case. Our regulators actually do impose significant capital load based on the type of investments that we have, and QBE has chosen that we will closely match the duration of the assets that are supporting our insurance liabilities to better represent the issue. We do have some growth assets, and we have mentioned, and we mentioned in today's performance update that we have tentatively gone up the asset risk curve in moving into some new classes, but we will predominantly have our insurance liabilities supported by cash and fixed interest because we think that that is the responsible thing to do.
Thank you, Chairman. We have one further question from Mr. Stephen Mayne. When disclosing the outcome of voting on all resolutions today, including the item dealing with Yasmin Allen's re-election, could you please advise the ASX how many shareholders voted for and against each item, similar to what happens with a scheme of arrangement? This will provide a better gauge of retail shareholder sentiment on all resolutions, and was a disclosure initiative adopted by the likes of Metcash, Altium and Dexus after their 2021 AGMs. Also, does Yasmin support the publication of AGM transcripts, and will she lobby to make this happen?
Well, I mentioned during my procedural remarks that we believe that one share, one vote is the appropriate way to go. So we will be disclosing the number of shares that voted for, against and abstained from any of the resolutions. In terms of AGM transcripts, I'm not aware of Yasmin's view. However, I did also indicate that a recording of this meeting will be available on our website, and the past several years' recordings are available on our website, which we think is an appropriate way for shareholders to access prior year details.
Thank you, Chairman. We have a further question from shareholder Michael Cockburn. Acknowledging that short-term interest rates have started to go up, but if interest rates stay relatively low, has the old idea of taking policyholders' premiums, investing them whilst awaiting possible claims, become a rather failing operating plan? Is there another process you can follow to get a long-term growth path, which in the last decade has not happened?
Oh, Mr. Cockburn, thank you for your question. It alludes to one of the answers that I gave earlier around what regulators now require, and I think the days of take the premium in, invest longer term and take the mismatch really is not something that insurance companies have done for quite some time. what QBE is doing is focusing on growth and on profitability, and Andrew touched on that, and I'm very pleased with the growth that we are seeing, and one of the things that we do want to do is to continue to grow responsibly across all of our portfolios.
We have one further question from shareholder Michael Cockburn. Most of your investments are in short-term deposits, with some growth opportunities being taken as well. Roughly what would a 1% increase in short-term rates make to operating profit before tax?
Mr. Cockburn, I don't have that answer readily to hand. However, I do believe that we did show a sensitivity in our annual report. But if you will bear with me, I'll ask our Chief Financial Officer, who is in the audience, to go and get his abacus out and do a quick calculation for me, and he will give me a figure before the conclusion of this meeting.
Thank you, Chairman. We have a further question from Mr. Stephen Mayne. Yesterday, I listened to the full 80-minute earnings conference call hosted by the new CEO and his CFO, Inder Singh, in February this year. Overall, I was very impressed with their ability to answer unscripted questions from analysts. Well done to the new CEO for not making the mistake of many new CEOs and confusing change with reform by needlessly sacking loads of senior executives and bringing in their own people. On that matter, has QBE hired anyone so far who previously worked for the new CEO?
Not that I'm aware, but Andrew, can I ask you that question?
So, no, I haven't, but I am aware of one person who had left my previous employer joining as a non-executive director on our US board.
Thanks, Andrew.
Thank you, Chairman. We have one further question from Mr. Stephen Mayne. What is the QBE policy position on making political donations, and will we be making any related to the current federal election? Will you consider following the lead of companies like BHP and Rio Tinto by strictly banning all forms of donations, including cash for access arrangements and six-figure subscription deals to attend party events, something which the likes of ASX and Woodside have done for many years with the Labor and Liberal parties?
We don't make direct cash political donations, but from time to time we do participate in business forums that focus on public policy, because we think that it's important that we contribute to that public policy discussion. Certainly those forums are not ongoing memberships, but are chosen on a case-by-case basis where we think that the interests of QBE will be served by participating in that discussion, and we do disclose that in our annual report.
Thank you, Chairman. And we have one further question from Mr. Stephen Mayne. In April 2020, Yasmin Allen was one of the Cochlear directors who treated retail shareholders poorly in a capital raising by supporting a discounted $880 million institutional placement at $140 a share, followed by a $50 million SPP for retail shareholders, which was patently too small. $300 million of the placement was allocated to a single London-based fund manager, Veritas Asset Management, 6 times the amount that was proposed for Cochlear's 37,000 retail shareholders in the SPP. Cochlear ended up expanding the SPP to $220 million after receiving $417 million worth of applications from 16,651 retail shareholders. It refunded $197 million, used a scale-back formula favouring wealthier retail shareholders, which included the directors. Given this disappointing history, if it comes to QBE doing a future capital raising, will Yasmin push for a Patrio structure that treats all shareholders equally, rather than what she supported happening at Cochlear 2 years ago?
Well, Mr. Mayne, I can't really comment on Cochlear. What I can say is that QBE is very focused on making sure that we treat all of our shareholders as equally as we possibly can, and we've got a track record of actually doing that. I think your question around the future is hypothetical in nature, and it's probably not worth me speculating on that at this stage.
Thank you, Chairman. We have no further online questions. We will now move to the phone questions.
Thank you. If you wish to ask a question, you will need to press star 1 on your telephone keypad. Your first question comes from Pablo Braid. Please go ahead.
Hello. I've got a question. I've got 2 questions, one on item 6 and one on item 5. So I guess I'll go with item 6 first, since there's been a few questions regarding that already. Just checking in, can everyone hear me?
Yes, we can hear you.
Great. So the QBE Board's argument against supporting Resolution 6B, which was published in the Notice of Annual General Meeting last month, included, and I quote, "We continue to support a smooth transition pathway." In this meeting, you've used the phrase orderly transition several times when referring to, the transition away from fossil fuels. So these comments were made in opposition to the resolution asking QBE to align its oil and gas underwriting with the Paris Agreement, which requires no new oil and gas projects. So I have a couple of questions about that. Is QBE saying that the IPCC's P1 pathway and the International Energy Agency's net zero by 2050 scenario, both of which give us a very slim chance of keep warming to the Paris Agreement goal of 1.5 degrees, and which require no new oil and gas production from now. So are you saying that they do not represent an orderly transition?
Well, Mr. Brait, I believe that I've actually addressed your question in answer to the previous questions. What QBE is looking to do is to work cooperatively and collaboratively in an orderly manner towards a net zero approach to our underwriting portfolios by 2050, and I've also committed the organisation to net zero in terms of our operations, but also in terms of our investment by that time.
But that sounds to me like you're rejecting an orderly transition in order to then just be able to do whatever you want.
Well,
would that be a more accurate way of describing it?
No, it wouldn't. I think I've answered your question. I have said that we are on an orderly transition pathway. I've also committed today that as part of the Net Zero Insurance Alliance, we will, within 6 months of the protocols for that alliance being finalised, publish our metrics and report consistently against those metrics.
Okay. I mean, considering the fact that there are orderly transition pathways available now, would you say I'd be justified in presuming that this Net Zero Insurance Alliance thing is just a delay tactic rather than actually a commitment to an orderly transition, since you're rejecting the available orderly transitions?
Mr. Brait, with respect, I think I've answered your question. Can you please go to the second question that you had, which you said was related to item 5?
Okay, I will. So I'm concerned about a serious conflict of interest relating to Miss Allen's directorship of Santos. QBE's profits are being smashed by ever-worsening extreme weather fueled by climate change, and Santos's business is reliant on selling a product that makes climate change and this extreme weather worse. So Santos is actively working against limiting global warming and therefore directly against the interests of QBE. QBE is currently in a position where its competitors, Suncorp, IAG, Allianz, some of the others that the previous question asker mentioned, have all put policies in place which prohibit underwriting new oil and gas production projects, which obviously includes those that Santos is pursuing. So, to summarise, the insurance industry's interest in slowing global warming is at odds with Santos's interest in selling lots of oil and gas. Now, the only way to solve this issue, as far as I can see, apart from Miss Allen not being on the board, which would be the best outcome for our company, is for QBE to never do business with Santos and for Miss Allen to recuse herself from any discussions and decisions relating to oil and gas policy. Are these commitments that you and QBE are willing to make?
I won't comment on Yasmin's directorship of Santos, but what I will say is that we believe that the skills and experience that she outlined will be very valuable to QBE when she is able to join our board. Speaking more broadly, and this applies to all directors, if any of us feel that we have a conflict of interest in any way, we recuse ourselves from any discussions that go to that. And I think that that's good corporate governance and will continue from QBE's perspective.
But do you recognise an inherent conflict of interest between the fossil fuel industry and the insurance industry?
I think
One fuel climate change, the other has profits impacted by climate change.
Working collaboratively with the oil and gas sector towards a net zero future, I think, is an appropriate contribution that the insurance industry can make.
I think the last 50 years has shown that the fossil fuel sector is not interested in working collaboratively on that matter. So I doubt you'll find a willing partner in that area.
Well, thank you for your comment. Are there any other questions on the telephone?
Thank you. There are no further phone questions. I'll now hand back to the chair.
Thank you. Before we move to the final part of the meeting, I just want to clarify one of my earlier statements regarding sustainable energies. We already insure more new sustainable energy projects than new hydrocarbon energy projects, and we don't envisage that reversing in the future as we progress our work with the Net Zero Insurance Alliance. I just want to make sure that my answer was understood with that. As there's no further business, I'll shortly be closing the poll for all items of business. I ask any shareholders who haven't submitted their votes to do so now. I refer you again to the instructional slides on how to vote now on the screen and behind me. I now close the poll and I declare the meeting closed. Thank you for voting. The results of each item will be announced to the ASX shortly. Thank you to shareholders for attending this meeting today, and I wish you a good day.